All right, we're going to be talking about OJ. And this is not the OJ we're going to be talking about. I know some of you were going to think about this. We're talking about orange juice. So, back in the day, they used to keep record of what they bought and sold. So, people kept a ledger. So, if you were a seller at a farmer's market, this is an actual representation. This is not accurate, but this is an actual representation of how some people would keep a ledger with the price on the left side and time they sold on the bottom. Now, you have to look at this from a technical view, but I'm going to explain it from a fundamental view. So you go to the farmer's market, load up your wagon, and at 8 o'clock, the market opens and people rush in to buy some product. There's eggs, chickens, steaks, there's vegetables. So your role with your neighbors, you're selling orange juice. So you're hoping to sell it for $5.10. And if you don't sell all of your orange juice today, well, it's going to rot and expire and you're going to take on a loss. However, no one's really standing in line. So you decide to lower your price to $5 and your line just builds up. People rush to your line, and so you increase your prices quickly to make money, to kind of break even so you don't lose money. And then your line starts dissipating again. So you come back down to the original price you intended to sell the orange juice. And by 12 o'clock, maybe some of your friends ran out of orange juice. You start noticing your lines getting bigger. So you just add a little sprinkle, a little salt, right? Salt and pepper. And you're testing it out. You add a little to your price and your line is consistent. You're like, I think I could raise it a little bit more. And the next hour goes by and you finally settle at $5.25. And the very last bottle of orange juice you sell is $5.20, and then the farmer market closes. So what I basically explained was fundamental analysis, and you can see a pattern in this chart. And no, this is not the Little Dipper, even though I made it that way. That's not the pattern I'm talking about. So we can scroll down and we can connect the dots. So this is the exact same chart, except we just connected the dots with a line and made the circle smaller. And of course you can see pullbacks, uptrends. You can see accumulation and a continuation of that uptrend until the end of the day, where volume dies off and the price kind of stays even. So with connecting the dots, this is technically what you would see in a trading chart. If you have a platform, a lot of technical analysts use this type of chart to receive their data and analyze it. Now, there could be many reasons why the prices fluctuated. So when there was plenty of orange juice, prices were cheaper. All of your neighbors are selling. And then demand increased because the prices were too low. So business works in a way, competition, right? You're going to have people trying to undercut you. That's just business, right? So they might lower their prices and lose money. But all of a sudden, all your neighbors went home. And so there wasn't a lot of supply left. People were running out of product to sell to the customer. So that could be a reason why prices increased. Demand could have a whole lot to do with it as well. When there's a lot of demand for orange juice, prices increased. So demand could be because of a restriction of supply, or it could be, some good marketing, good word of mouth, good advertisement, good, could be good marketing that increased the demand. People were like, yeah, orange juice is healthy. So there could be many reasons. Technical analysis is just a way to simplify the unknown. You don't know unless you're there at that farmer's market why the orange juice is fluctuating. So I want you to look at price on the left side, time on the bottom, and we're going to open up the Dow Jones. Price on the left side, time on the bottom, on this hourly, right? So you can see that not much has changed. And this is what you would see in most of your media outlet. But if you start getting into trading, you're going to probably trade off a platform and do your analysis using a platform. The only difference between this is the price happens to be on the right side. So if we zoom in on this hourly orange juice chart, does that look familiar? That's pretty familiar to me. All that is this. You connect the dots, and this is what you get. This is what you get. So you can see a lot of truth that Dow Jones went over in this market. So if we go to the weekly and we kind of squish this chart down, you do see higher highs and higher lows. Higher highs, higher lows. Higher highs, higher lows. Higher highs, higher lows, higher highs. So this is trending up. So if you were a reporter and someone asked you, how's the orange juice market doing? I would say, yeah, it's doing pretty well. We're actually pulling back right now, but the primary trend, the market's a pretty good market to get into. And you'll hear terms that were coined, the trend is your friend until the end. This is something to apply to all markets. So if we look at the monthly chart, all right, and this goes back to 1971, where orange juice features were $37. And the price got all the way up to about $415, we'll say. You know, the overall market has been trending upwards. So that's pretty good. That's pretty good. And you have, the more you zoom in, let's go to the weekly chart, the more detail you see, the more trends you identify within the primary trend. We go to the daily, you're going to see more trends. And if you go all the way down to the hourly and squish this chart together, you'll get more detail in the price movement. So that is kind of the origins of record keeping. And as technical analysts, when you're doing technical analysis, you're just looking at the books. You're almost like an accountant. You're looking at the history of price. And every dip might have a story. There might be a fundamental reason on the news of why this occurred. And so if you see a major dip like right now, what's going on since November, you might want to look at, hey, I wonder if there's a reason why price is going down. So the chart is just a way to say, hey, something happened here. And if you want to know, do your own research. So we're going to move forward in explaining what candlesticks are later. And then we'll go over trends. We'll go more into detail about trends. But this is just a basic overview of how charts work and how they were created and what they are. It's important to know the why. And as always, dig into these topics. This is only the tip of the iceberg. You should come up with your own conclusions. And that's it. Thank you.